Your parents paid $150,000 for their house in 1995. That same house today, $520,000. But here's the part that'll break you. Mortgage rates just dropped 30%, from 8% down to 6%. Everyone's saying, now's your chance. Buy now before rates go up again. Here's the truth they won't tell you. Even with rates at 6%, you still can't afford that house. Not even close. And it has nothing to do with rates. Let me show you something wild. Your parents made $40,000 a year when they bought. Their house cost 3.7 times their income. Tight, but doable. You make $60,000 now. Sounds better, right? That house cost 8.6 times your income, more than double the burden they faced. But wait, it gets worse. They needed $30,000 for the down payment, saved it in 3 years while renting a cheap apartment for $500 a month. You need $104,000 for your down payment. Know how long it takes to save that while paying $2,000 a month in rent? 18 years. You'd be 45 years old. Your parents bought at 25. You can't buy until 45, if ever. This isn't about you not working hard enough. This isn't about you spending too much on avocado toast or whatever BS they're selling. This is about a system that fundamentally changed, on purpose, to lock you out of wealth building while your landlord builds equity off your rent payments. And I'm about to show you exactly how they did it, and why mortgage rates dropping doesn't fix a damn thing.
All right, let's break down why everyone celebrating lower rates is getting played.
The average rate on the popular 30-year fixed mortgage fell to 5.99%, just barely in the fives, according to Mortgage News Daily. Last year at this time, the rate was 6.89%.
Mortgage rates dropped from 8% to 6%. That's a 25% decrease. Sounds massive. Financial news acting like the crisis is over. Here's the real math. $400,000 house. You put down 20%. That's $80,000 cash. Mortgage for $320,000. At 8%, monthly payment is $2,350. At 6%, monthly payment is $1,920. You've saved $430 a month. Cool. Except you still need $80,000 sitting in your bank account before any of this matters. Median American household makes $62,000 a year. After taxes, health insurance, all that garbage, take home is around $46,000. To save $80,000, you need to put away your entire salary for almost 2 years. No rent, no food, no car, no life, just pure saving. Obviously impossible. So let's be realistic. Most financial experts say save 10 to 15% of your income. Let's say you're hardcore. You save 20%. That's $9,200 a year. Know how long it takes to save $80,000 at that rate? 8.7 years. But here's the kicker. You're not saving in a vacuum. You're paying rent the whole time. Average rent in America right now, $1,700 a month. That's $20,400 a year, just gone, paying someone else's mortgage. So while you're trying to save $9,000 a year, you're spending $20,000 on rent. The math doesn't math. And this assumes nothing goes wrong. No medical bills, no car repairs, no job loss, no emergencies for almost 9 years straight. Who can do that? Nobody. That's the point. Now here's where it gets really messed up. Your parents didn't face this at all. 1995, median home price was $117,000. Median household income was $40,000. House cost roughly 3 times annual income. Down payment was $23,000. Saved that in under 3 years while paying $600 a month rent. Fast forward to today, median home price is $420,000. Median income is $62,000. House costs almost 7 times annual income. Down payment is $84,000. Takes 9 years to save while paying rent that's triple what they paid. The ratio is destroyed, completely cooked. But everyone's focusing on mortgage rates like that's the problem. It's not. Rates are a distraction. The real problem is home prices went up 360% since 1995. Know how much wages went up? 55%. Prices up 360, wages up 55. You're supposed to compete in that environment? Straight up impossible. And this isn't some accident. This isn't market forces. This wasn't a whoops moment. This was designed, deliberately, to transfer wealth from younger generations to older ones, from renters to landlords, from workers to investors. And falling mortgage rates? That's just the carrot they dangle to make you think you still have a shot. You don't.
Here's the first thing you need to understand. Your income is trash compared to what your parents earned. Not in dollar amounts, in buying power. Your dad made $45,000 in 1998. You make $70,000 now. You thinking you're doing better, right? Wrong. You're getting wrecked. Here's why. His $45,000 bought him a house that cost $130,000. His salary covered the house price in 3 years of gross income. Your $70,000? Houses in his neighborhood are $500,000 now. Your salary covers the house price in 7 years of gross income. He needed to work 3 years' worth to afford his house. You need 7, more than double, for the exact same house, on the same street, same schools, same everything. That's not inflation, that's theft. But it gets darker, way darker. After your dad bought his house, his income kept growing. Regular raises, promotions, cost of living adjustments. His income went from $45,000 to $65,000 over 10 years. But his mortgage payment stayed exactly the same, locked in at $2,000 a month. So his housing cost as a percentage of income went down every year. First year, housing was 53% of his gross income. Year 10, 37%. His life got easier every year he owned that house. Now you finally scraped together a down payment at age 35. You're making $80,000 by then. You buy a $500,000 house. Mortgage payment is $3,000 a month. That's 45% of your gross income. And guess what? Your raises aren't keeping up with inflation anymore. Haven't for 20 years. So your real income is flat or dropping. Your housing cost never shrinks as a percentage. It stays locked at 45%. Forever. Or gets worse if property taxes and insurance keep climbing. His life got easier. Yours gets harder. Same house. Now here's the part that'll gut you. Home equity. Your dad bought for $130, paid it off over 30 years. House is worth $500 now. He built $370,000 in equity. Didn't do anything special, just existed in the house. The market did the work. You buy now for $500. 30 years from now, that house is worth what? Maybe $700, maybe $800 if you're lucky. You build $200,000 to $300,000 in equity, less than he did, even though you paid way more to begin with and struggled way harder to buy it. The system is rigged to give earlier generations more wealth for less effort, period, full stop. But nobody tells you this. They just say work harder, save more, stop buying coffee. It's gaslighting. The math is broken. Has been for decades. And here's the wildest part. Your parents don't even realize they had it easier. They think they earned it through hard work and sacrifice. They didn't. They bought at the right time in a system that was still functional before it got hijacked. You're trying to buy in a system that's fully rigged against you, and lowering mortgage rates from 8 to 6 doesn't fix that, not even a little bit. The problem isn't the cost of borrowing. The problem is the cost of the asset and who's allowed to own it. Which brings me to the second revelation about who's actually buying these houses.
You know who bought 17% of all single-family homes sold last year? Not families, corporations, investment firms, Wall Street. 17%, 1 in 6 homes bought by companies, rented back to people like you at $2,000 a month. This is new. This didn't exist when your parents bought. Corporate homeownership was under 3% in the 90s. Now it's 17 and climbing. And these corporations aren't buying to live in the homes. They're buying to extract rent forever. They never sell, just accumulate and rent. Blackstone owns 80,000 single-family homes. Invitation Homes owns 85,000. American Homes for Rent owns 59,000. These aren't houses anymore. They're assets in a portfolio.
stocks, bonds, real estate, all the same to them. And here's the thing, you can't compete with them, not even close. You're trying to scrape together $80,000 for a down payment. Took you 9 years to save it. You finally make an offer on a house listed at $400,000. You offer asking price. You're excited. You think you have a shot. Blackstone offers $420,000, all cash, closes in 7 days. You're outbid before you even knew you were competing. They're not using mortgages, they're using investor capital, billions of dollars sitting in funds, ready to deploy. They don't care about interest rates, they're paying cash. So when mortgage rates drop, it helps them more than it helps you, because cheaper debt means they can leverage more purchases, buy more homes, faster. You get a slightly lower monthly payment, they get to buy 10% more inventory. Who wins that scenario? Not you. And here's why they're doing it. Rent yields. They buy a $400,000 house, rent it for $2,400 a month. That's $28,800 a year, minus property taxes, insurance, maintenance, maybe $22,000 net. That's a 5.5% return on a $400,000 investment every year, forever. And the asset appreciates on top of that. Compare that to bonds at 4%, or stocks that might crash. Real estate is stable returns plus appreciation. They can't lose. So they keep buying, and every house they buy is one less house you can buy. This is why inventory is so low, not because people aren't selling, because corporations are buying everything that hits the market. You're competing in an auction you can't win, against buyers with infinite money who don't even need the house, they just need the yield. And the government lets it happen. Zero restrictions, no limits on corporate homeownership. They can buy every single family home in America if they want, legally. Canada banned this. New Zealand banned this. They saw what was happening and said no more. America encourages it, because those corporations donate to campaigns, lobby Congress, fund think tanks that say this is actually good for the market. It's not. It's destruction of the middle class, conversion of homeowners into permanent renters, generational wealth extraction. And you're supposed to just accept it, compete harder, save more, offer over-asking. You can't. The game is rigged. You're not playing against other families anymore. You're playing against Goldman Sachs. I broke down the retirement scam in another video, how the system is designed to keep you working until you die. Same energy here, different mechanism. They don't want you owning assets, they want you renting forever, paying them, building their equity while you build nothing. Mortgage rates at 6% doesn't change that at all. Now let me show you why this is happening, the real reason, not the BS they tell you on the news.
You want to know why housing is broken? Why you can't buy but corporations can? Why prices went vertical while your wages stayed flat? It's not complicated. It's 3 things, all intentional, all policy decisions. None of it is an accident. First, zoning laws. America stopped building enough housing in 1970, on purpose, through restrictive zoning. Cities passed laws limiting new construction, single-family only, no apartments, no density, minimum lot sizes, setback requirements, height restrictions, parking mandates, all designed to keep housing scarce because existing homeowners wanted their property values to go up. And it worked. Supply stayed flat, demand kept growing, prices exploded. Your parents benefited from this. Their $150,000 house became $500,000 because nothing new got built nearby. Artificial scarcity made them rich. You're suffering from the same policy because now there's nowhere to build. Everything's zoned against new housing, so inventory stays low, prices stay high, and cities won't change it because homeowners vote. They show up to city council meetings and block every new development. They don't want more housing. They want high prices. So you're locked out by design to protect their wealth. Second, interest rates.
The Federal Reserve kept rates at zero for 15 years, 2008 to 2022, 0% money. Know what happens when you can borrow for free? Asset prices explode. Stocks, bonds, real estate, everything goes vertical. Rich people and corporations borrowed billions at 0% and bought everything, houses included, because why not? Free money. You didn't have access to that money. You're not Goldman Sachs. You don't have a credit line with JP Morgan. You can't borrow $100 million at 0% to buy a neighborhood. They could, and they did. So housing prices tripled during the zero-rate era, not because of supply and demand, because of free money flooding into assets. Now rates are higher, 6%, and everyone thinks that'll crash housing prices. It won't, because the rich already bought. They're sitting on 30-year mortgages locked at 3%. They're not selling, ever. You're trying to buy at 6%, competing against people who bought at 3% or paid cash. The math doesn't work. This was a massive wealth transfer from people who couldn't access cheap debt to people who could, by design. Third, financialization. Wall Street figured out in 2010 they could securitize rental income, bundle up 10,000 homes, sell bonds backed by rent payments, just like they did with mortgages before 2008, except this time with rentals.
So now your rent payment isn't going to a landlord. It's going to bondholders, pension funds, sovereign wealth funds, foreign investors. Your $2,000 a month is a bond payment to someone in Dubai or Norway or China. They turned housing into a financial instrument, an asset class for global capital, not homes for people, assets for investors. And once Wall Street is involved, prices never come down because the entire financial system is built on them going up. If housing crashes, the bonds default, pension funds collapse, banks fail, systemic risk. So the government props it up, no matter what. Can't let housing fall, too big to fail, just like the banks. You're trying to buy in a market where the government is actively preventing prices from dropping because a crash would take down the entire financial system. They chose protecting asset values over letting you afford a house, deliberately. Zoning creates scarcity. Zero rates inflated prices. Financialization locked them in permanently. That's the system. That's why you can't buy. That's why mortgage rates don't matter. The game is rigged from multiple angles by multiple players, all working in the same direction, against you.
So what does this actually mean for your life? Let's get specific. First, you're probably never owning a home, not in any city with jobs, not in the next 20 years. The math doesn't work. You can't save fast enough. Prices go up faster than you can save. By the time you have a down payment, the house costs more. Forever treadmill. You never catch up. Second, you're building zero wealth. Your rent goes to your landlord's equity. Your landlord might be Blackstone. Your rent payment buys them another house, which they rent to someone else, who builds them more equity. You work, they profit. You get older, they get richer. That's the cycle. No escape. Third, you can't retire. Homeownership was how middle-class Americans built wealth. Paid off the house by 65, lived on Social Security, house was paid off. Low expenses, retirement was possible. Not anymore. You'll be paying rent at 70, at 80, until you die. Rent doesn't stop, ever. Social Security is $1,200 a month if you're lucky. Rent is $2,000. You're short $800 every month. What do? You can't retire. You work until you physically can't. Then what? Homeless, or move in with family who's also broke. That's your future, unless something massive changes. Fourth, your kids are cooked, even worse than you. If you can't buy a house, you can't pass down generational wealth. Your kids start from zero, just like you did.
Except the system will be even more rigged by then. Housing will be even more expensive, corporate ownership even higher. They'll have zero shot. Generational renting becomes permanent. Fifth, society breaks. When an entire generation can't build wealth, can't retire, can't stabilize, things get unstable, fast. Crime goes up, birth rates drop, people stop caring about the future because they have no stake in it, no property, no wealth, no nothing. A nation of renters is a nation of peasants. Feudalism with extra steps, and that's where we're headed. Mortgage rates dropping from 8 to 6 doesn't fix any of this. It's a band-aid on a broken system, a distraction from the real problem. The real problem is housing became an investment instead of a human right, a commodity instead of a necessity, a profit center instead of shelter. And nobody's fixing it because the people in power own houses, lots of them. They're profiting from this. Why would they change it? They won't. Which brings me to the final piece.
Here's what nobody wants to admit. This wasn't an accident. This wasn't markets doing market things. This wasn't unintended consequences. This was policy. Deliberate, calculated, by design. They wanted housing prices to go up, needed them to, because 70% of American wealth is tied up in home equity. If housing crashes, boomers lose their retirement, banks lose collateral, the economy collapses. So they chose to protect existing homeowners at the expense of future buyers. You. They restricted supply through zoning to keep prices high. They inflated prices with cheap money to create wealth effects. They allowed corporations to buy everything to keep demand strong. All intentional, all policy choices made by people who already owned homes to protect their own wealth. You were sacrificed. Your ability to buy a home, your chance at wealth building, your shot at retirement, all sacrificed to prop up their asset values. And they'll keep doing it because the alternative is a crash, and they can't allow that. Too much wealth at stake, too many voters who own homes, too much political risk. So you stay locked out, forever, by design. They'll tell you it's your fault. You're not saving enough. You're spending too much. You need to work harder, budget better, sacrifice more. Gaslighting. Straight up. The math is broken. You can't budget your way out of a rigged system. Your parents bought homes because the system was designed to let them. You can't buy because the system is designed to stop you. Same country, different rules. Generational theft dressed up as economic policy. And lowering mortgage rates is how they pretend to care. Look, we're helping. Rates are down. You can afford a house now. You can't. The rates don't matter. The asset price matters, and they'll never let that fall. This was always the plan. Create a class of permanent renters, extract wealth from labor, concentrated in assets, protect asset holders at all costs. You're living in the aftermath, a system built to benefit people who bought 30 years ago at your expense. That's the truth they don't want you to see. Look, I know this is brutal. I know it's not what you want to hear. But you need to know the truth. You're not failing. The system failed you. Your parents aren't smarter or harder working. They bought at the right time in a system that still worked before it got hijacked. You're trying to win a game with rules designed to make you lose, and everyone's pretending the rules are fair. They're not. Mortgage rates dropping to 6% doesn't fix this. Rates could drop to 3%. Wouldn't matter. The asset price is too high. Corporate buyers are too strong. Supply is too restricted. You're locked out by design, and it's not changing. So what do? Honestly, I don't have great answers. The system is what it is. You can try to find cheaper markets, move somewhere housing is still affordable, small towns, Midwest, places without jobs, trade your career for a mortgage. You can accept renting forever, build wealth other ways if possible, stocks, crypto, whatever. Hope it's enough for retirement. Probably won't be. Or you can get angry
Demand change. Vote for people who fix zoning, ban corporate homeownership, build more housing, change the system. Good luck with that. The people profiting from this system are the ones in charge, and they're not changing it. So yeah, you're stuck, and I'm sorry, but at least now you know why. If this pissed you off or opened your eyes, hit that like button. Subscribe if you want to see more of this kind of breakdown. I'm pulling apart every broken system that's screwing over working people. Drop a comment. Tell me your situation. Are you trying to buy? Have you given up? What's your plan? Let me know. Stay angry, stay aware, because if enough people understand what's happening, maybe we can fix it. See you in the next one.